All right, everybody, happy Monday and welcome back into Mining Stock Daily. We have a little bit of, I guess you can call breaking news on the development front with our good friends with Meridian Mining. They do trade on the TSX with MNO and on the OTC QX with MRRDF. And as promised, we knew it wasn't too far away, but the company did publish that pre-feasibility study for the Cabaçal VMS project in Brazil. And the numbers look good. Base case after tax NPV is $984 million US with a 61.2% IRR. And we can talk to Gilbert Clark about what those numbers look like at the current spot numbers with these metals. But all else, low capex, about $250 million. That includes pre-investment for expansion to 4.5 million tons per annum from year 4. And they also, obviously, because of all the drilling they've done over the last year and before then, they now have a reserve. The Cabaçal reserve is 41.7 million tons at a grade of 0.63 grams per ton gold, 0.44% copper, and 1.64 grams per ton silver. So, Gilbert, numbers look good. I mean, you came through. You knew that you kept on telling us all year since the PEA was published a little over a year ago. This is what you were expecting, and this is what you delivered.
Yeah, Trevor, we over the last 2 years since the PEA is a little bit out of date. We've come through a real change in the company. We've beefed up the board, we've beefed up management, and we've invested the capital that we've raised. We've invested in the drill bit into the deposit at Cabaçal, both in the drilling, the metallurgy, technical studies, environmental studies to produce today, which I think is one of the most significant pre-feasibility results that's come to the market in some time. And very much we're seeing the nascence of a mid-tier mining company. As you said, Trev, the base case after tax NPV4, I say NPV5 is 984 million. For some of the other people out there, if you're worried about what it looks like at, say, a higher discount rate, so we go to 8% discount rate, 796 million USD post-tax. So these are incredibly robust numbers. And today, I think at open, companies can be trading at about 0.12 to NAV of the PFS. So there's a huge potential for multiple in the share price in the coming days and weeks. Most importantly for the investors and stakeholders in the company, we've got a life of mine annual production of 141,000 ounces gold equivalent. In the first 5 years, that going to be 178,000 ounces of gold equivalent production. A couple of people are going to ask us, Trev, what are the metrics that you use for exchange rates, for commodity prices? They're exactly the same sources as per the PEA. So for the commodity prices, we're using CIBC analyst consensus long term, which was $2,119 per ounce, $4.16 for copper, and $26.89 for gold. For the exchange rate, again, we use the Brazilian Central Bank's guidance, long-term guidance of 5.99 reality to one USD. So we use the same inputs as before. So we're very, very, very happy. Like you said, Trevor, we look at the spot price at the time, which was $2,917 for gold, $454 for copper. That gives us 1.41 billion in valuation at NPV5, which in Canadian dollars, over $2 billion on spot price. So it's a tremendous result for our shareholders. And Trev, you've been along there with us for the last, probably nearly 4 years. Really, it's what we've said the project had 4 years ago, and we're delivering on it today.
If we look at these numbers compared to what you published back in the PEA, you added about $400 million in NPV since then, and you add about, I don't know, 2.5-3% of IRR. And obviously the metals prices are different, but what within the technicalities of Cabaçal are you finding further optimization or further value that add specifically to that net present value?
Really interesting question. So this is an optimized pit. So the batter angle has gone to 54 degrees We've also optimized it for mining costs. We've reduced the power cost by nearly 50%. We used 7.3 cents a kilowatt for power. That's down to 5 cents US cents a kilowatt. So there's a massive reduction there. Trucking, we did a trade-off study for trucking. We looked at 40-ton trucks, the 55-ton trucks, and the haul packs, the 777 haul packs. Haul packs are just ridiculously expensive for OPEX and costs, and we settled on the 55-ton trucks, which are just a smidge under the same price as a 40-ton truck in fuel, but we're moving 30% more material, so that drives our OPEX down to 20.03 cents a ton mining OPEX. Certainly that's been one of the key drivers, getting that OPEX down. At the front end, in the CapEx, we have a lot more strip this time. The reason we did that, so in the PEA there was only $8 million worth of strip, pre-strip, and this one was like 30 million tonnes of pre-strip. And the reason we're doing that is that exposed more material in the sort of sub around 2 grams. So for the first 4 years, we're actually mining 2 gram dirt and then about a 1 gram gold equivalent or 2 gram gold equivalent for the first 4 years and 1 gram gold equivalent for the rest of the mine. We've also front-end the CapEx. So what we've done is the crushing circuit is rated at 4.5 million tonnes, and we're laying the civil, the footworks, the cables, the instrumentation to expand it up to 4.5 million tonnes in year 4, the throughput. So it shortened the mine life from some 22, 23 years down to about 10.6, but we'll also have another 8 million tonnes of low-grade mineralisation that we're stockpiling. So when you combine all these things, it really shows, and this is the aim of the work over the last 2 years, what does a production asset look like? And not many people have seen a production asset come to the public markets in a real production asset in the last 10, 20 years. This is very much the naissance of a mining district, and our shareholders in Meridian have got the exposure now to tremendous upside in their share value.
You kind of hinted towards the processing just a little bit, but maybe just focusing on that. Any major changes in the flow sheet from the previous technical report to this PFS?
A couple of things. What we've done is in the overall gold and copper recoveries, we capped them so that they previously would go up to sort of 98.5% recoveries. We've capped them at 97 and 96 copper gold recoveries. The flow sheets remain the same: 200 micron grind, gravity, then flotation, slightly longer resonance time, and we've gone away from a sort of general PAX reagent to 2 selective reagents. One of the upside in this is it's increased the life of mine copper concentrate grade up to 29%. Again, with no impurities, some of the best blending concentrate you can find in the market going forward. And it's the most perfect copper concentrate just for straight out smelters. But if you've got a dirty concentrate, or a low sulfur concentrate, this is the perfect material for it. So really, no change in the flow sheet. Our flow sheet, basically, our pilot plant was 4 years production. All we've done is optimize that for modern equipment and modern reagents.
So obviously the next step would be putting a full feasibility study on this. Where does this PFS kind of sit as far as getting a lot of that legwork done? A lot of CEOs would sit here and they'd share, talking to me and say, "Oh, we're doing most of the work in the PFS, so the full feasibility study is not going to be as detailed as one might think. It's not going to be as big as what you're already, or bigger than you're already seeing, if I'm saying that correctly." But I just so looking ahead towards a full feasibility study, thinking about this capex, thinking about permitting and all those things, where does the next 2 years with Cabaçal kind of sit now that this report is published? And also on the back, you and I sat, not very long ago, about a week ago, and talked about Santa Elena and where that fits, in the Cabaçal belt as far as production. So, what does that look like?
Well, shareholders don't pay me to sit around. So come April, we start the work on the DFS. So we go straight into DFS. We're not mucking around here. So the DFS is all about cost certainty, making sure everything's at a much more, say, within 15% variation on costs. So that's quite a critical aspect of the DFS. We're also going to be doing approximately 100-hour mini pilot plant and on the metallurgy. And what we'll also do for each quarter of the first 3 years of production, we'll take a representative sample and we'll put that in the flow sheet. And that's basically, again, risk mitigation for the future, the DFS statement. What was so important about this document is we wanted to give someone with real meat on it, the project finance banks, so they can look at it, the project finance groups, while we go through the next phase of DFS. So that's quite critical. Now, when we look at St. Helena, so we're on spot price today, we've got $1.4 billion in value. We have now got, in this year, we'll be producing what I hope to be, again, it's up to independent geologists, but at least a measured and indicated resource, future measured and indicated resource on St. Helena. So there's more value that's coming into this project. And thankfully to that raising that we did about a month ago, which all shareholders participated and those who reached out to me also, we've now financed to do this. So we don't have to come to market looking for money on the back of the DFS. We're financed to do this now. So it's incredibly important. It was risk for all people who did not have any results at the time. So now we've gone forward, financed the company, set ourselves up for growth, and just keep delivering these material growth points to the Cabaçal project.
All right, I'm going to ask you a little bit of a cheeky question, Gilbert, and I know you can take it. So I went back and I was trying to look at how much money you had raised since the PEA. About $55 million Canadian. Given this, now that the PFS is out, would you say that your investors and shareholders got their $55 million worth of value?
So for 55 million, let's say that's circa 40 million US.
Sure.
So the 40 million US investment generated 984. This is what production assets are. And
right.
what I stress to my shareholders and investors is in private equity, you look at an asset that's undervalued, you put the money into the ground and you generate tremendous wealth for the project and you go forward. And this is what we've done. So we've taken a very sophisticated stance in how we're going to deploy our money. We've built up the share registry of both retail, high net worth individuals, major funds across the world. They're all the same thing about growing this project in towards production. And from that, we're generating these significant numbers. I mean, 984 million USD, 1.41 billion on spot. And this is what we want to show to the market, is when you buy Meridian's equity shares, you are buying an interest into a production, future producing field, not a speculative investment. This is hard asset development. And I think the investors have got tremendous benefit from their investment in quite challenging markets.
I want to, my last question, I meant to ask you this before, Gilbert, but I want to ask you about the drilling strategy leading up to this and now having that reserve. You're very methodical with how you drilled this out and getting to this point. I mean, I guess what kind of like approach would you advise other peers of yours, maybe kind of in that moving to a PFS type of level of really what is most important with that conversion, but also with expansion?
What I would say is, and this goes back to a conversation I had long time ago. If you want to develop a mineralized envelope and then sell it, you think, geez, haven't I done a one job? I've sold it for maybe 1 times potential cash flow. Or you invest and you drill it out as every mining company does to the creek. 12 and a half, 12 and a half by 12 and a half, or 20 by 20, whatever it is.
Mm-hmm.
That's a real mine. You're not speculating, you're building real wealth. And if other companies want to speculate and think they've done a wonderful job by selling their asset for one times cash flow, potential cash flow, well and good. I mean, there's 1,000 companies out there that have tried that and 999 that have failed. What we've done is develop the pathway through to production. We're advanced in our permitting. We've got a measured and indicated resource of 51 million tonnes at nearly a gram, proven and probable. So I think it's like 89% in proven, 11% in probable reserves. And at the same time, we've also been able to drill it so much that we can interpret what the mineralization is doing, and that now we've actually got the first sniff of an underground resources at Cabaçal. So we've got this shallow, high margin open pit that's always down to about 200 meters depth, and then the next high value underground is down to about 400 meters. So we're now starting to see that potential underground growth at Cabaçal. Now this is tremendous. I mean, there's a couple of companies up there whose upside is at, I don't know, 1,400 meters below surface. Shareholders in Meridian, their upside is immediate upside is just down dip from Cabaçal, or it's a long strike and infill at Santalina. And then we've got all the exploration of the belt, which is what VMS belts are. They're pods of mineralization. So this is, look, you have to go back 100 years. Oh, I guess you could go back to Sandfire in Australia with the DeGrussa discovery. That was a fantastic opportunity. Or you've got to go back to something like Flin Flon or one of the other great VMS belts to see what these things are.
All right, everybody. Gilbert will definitely probably attest if you shoot an email out to info@Meridian Mining or something like that. It goes directly to him and he'll respond. He always does. Gilbert Clark, President CEO of Meridian, again, trading on the TSX with MNO and on the OTCQX with MRRDF. There's going to be a lot of questions with this report, Gilbo. So time's of the essence and you better get to them. So thanks so much for your time and congratulations.
Trevor, thank you again. Great support. I just want to leave something for all the shareholders today, which I've not been able to say since I grabbed hold of the project. Meridian can now report proven and probable 41.7 million tonnes of ore. Not many junior companies can say that word.
No, not too many. All right, Gilbo. Thanks so much. Have a good day.
Ciao.